Hello, my name is Jade Bronco. I'm here to share with you a very important message. You're probably familiar with the notion of buying low and selling high. The market is at a high, has been at a high, starting to roll over. It's time to sell high. It's what you do to prevent a loss. It's also what you do to buy low after you've moved to cash. In nearly 30 years as a financial expert, I've never seen this technique mastered. Too often people get, connected. They get a little bit too, attached to their positions, or they forget about them outright. I'm only going to make this a quick announcement, so listen close, keep it tight, and if you find it valuable after you check the facts, then do the right thing for yourself. I'm not an advisor. I don't want to be an advisor. I don't want to be affiliated with a broker. I don't want to sit on your money and watch it plummet like it did in 2008. That's not what I'm interested in. So don't expect this alert to come from anybody other than a third party, somebody outside the establishment, and nobody's further outside of it than me. Here's the disclaimer. Pause and read it. Here's me. Another economic recession, I don't know what to call it, is upon us. I have the proof. Pay attention. In March 2nd of 2020, I declared to the world that the COVID-19 panic was merely a retracement, not a reversal. You see that link along the bottom? Go to it. You'll hear me between the 9 minutes and 15 seconds and 10 minutes and 40 seconds. Just listen to that part. You'll hear me say, buy the dip. This is where you buy low. I'm not one of those fear mongers. I don't want to scare you into taking action. You do the right thing at the right time and you live with it. Or you don't and you live with it. I predicted this. I said it was a retracement and not a reversal, and I was right. Here's another one. Like, why should you listen to me is the answer, is the question here. Well, I called the high on January 5th of 2022. I was in bullish trade, meaning, I don't have to explain that, on Apple and Microsoft. At the end of the day, I reversed both of them. And I said, hey, we're at the top. This is the top. I made money on it, of course. And I'm not one of those, people that like to make a lot of noise and don't put their money where their mouth is. What you'll see on these slides, I don't even take it back. Right here on the Apple slide, you probably see my cursor, but along the bottom, those red lines and green lines, that's proof in the pudding. That's the actual trade confirms. I don't just spout, hey, the sky is falling. I actually take advantage of it. You can too. It's not as easy for the normal person, but hell, I don't know. Hit me up and I'll see what I can do for you, right? Did the triple top reversal made money on Microsoft, made money on Apple? Why do those two things matter? Because they are 12.8% of the entire S&P 500. And they're also a part of the tech sector. Want to see a picture of that? Here it comes. It's the fuchsia one, the bright pink one across the top. Notice what it's done since the beginning of the year? It's rolled over and it's dropping. Hey, here's the good news. Something else is going up. Pretty common in the market for something to go down and something to go up. But when everything goes down, which other than energy, and why it's even in the S&P is disputable, why real estate's in there is disputable, but there are things that are going up, and if you don't know what they are, then you're going to get dropped. It's a no-brainer. Here's the reversal top. This is an actual pattern. In order for it to have a top, it must be trending up. If there's an uptrend, there must be a reversal top. All trends end. Inherent to the uptrend is the word end. How does it end? With a pattern. Back in 2020, in March, there was a retracement. That's not a pattern. That's a Fibonacci. And here we have a pattern. You want to know what the odds are of this pattern confirming? I'll tell you. 85%. It's the strongest reversal pattern of reversal patterns. You want to know who else knows that the market's turning down? This is a hedge ETF. It's an inverse ETF. Look it up if you don't know what it is. Inverse ETF. Do you see the volume there? At the beginning, from June to December, it was at about, call it 10 to 15 million per day. Right now, it's at 60 million a day. That's no coincidence. That's actually because hedges are occurring. You know, this is one of the things that we did not have in 2008. We tried the VIX. That was the best indicator for hedging. This, we have proof positive of billions of dollars stacking up to place a portfolio for those who know how, and this is where they go, to be simultaneously long and short the market so they don't lose. It's a simple hedge, and it's effective. And that is not some kind of fancy tea leaves, throwing bones, palm reading, head and shoulders, blah blah blah. That's money, guys. That's the real fact. I've never had greater proof that the market is going down than the institutions hedging the way they are right now. There's proof. You've got it. And now I'm moving on. This pattern we've seen before. I mentioned 2008. 2008, the S&P 500 tripled, and then it fell to half. Same thing has happened since 2008, which took about 7 years to recover. So if you don't mind sitting in doing nothing but losing and being sad for the next 5 to 7 years, by all means, stay in your trades. That's fine. But if you want to skip the next 5 to 7 years working your butt off to try to get back to break even, then you might want to consider one of 3 exits. Sell high, collar it up. It's on stocks specifically. Buy the hedges that you're seeing here. Market's going to fall to about 300, 50% up from its high. That's my prediction, my amateur prediction. By the way, this is the part that should scare you. You know the staff of life, they talk about wheat, corn, foodstuffs? They've doubled, and in some cases quadrupled, in the last 4 months. Nobody tells you that, do they? Eggs aren't showing up on the shelf. You can't buy eggs. Your spaghetti's hard to find. What do you think these things are signs of? A famine, people. A famine. If your equities, meaning your retirement accounts and other accounts, are not keeping pace with your food, you'll starve. You will. That's the cheery part. No, the cheery part is that you can take action. I don't want you to be afraid. I want you to be informed and then take action. Here's what you do. Register for the live event. What live event? I don't know. You're smart. You people are smart, right? You can figure this out. Find out how to get a hold of me. Shoot me an email. Post to something or other on this channel, and I'll get back to you. Simple as that. Hopefully before the slump is too far in the rearview mirror for you to get out at a relative high. That's the end. Be informed and unafraid. This is Jade Bronco.